Welcome to the morning market briefing, Friday, March 18th, 2022. Apparently, some pretty heavy St. Patty's Day hangovers going on with the audience. Tom, do you have a big St. Patrick's Day?
No, we didn't do anything.
Nothing.
It used to be a bigger thing in our household, but it isn't anymore.
Molly didn't throw down?
No, well, she threw up, which probably counts.
Yeah. Ben, any St. Patty's Day traditions?
No, and I was going to go to Mac McGee's, but then that was very crowded. But then Sam and Krista said, come to Smyrna Market Village. So went to Smyrna Market Village. It was a good place, but nothing really spectacular. Food took a long time to get there. So
Bummer. Well, we will, for Joe's benefit, we'll continue to talk about markets. Bank of America is suggesting that we have not seen the lows. Their bull bear indicator, though, is continuing to creep down. Then we're at a 2.3 right now. I think some people are hoping it goes below a 2 in a weird masochistic way, because that tends to be a buy signal for the market. When people are very pessimistic, it's a good time to be getting in. Obviously, pretty strong rally this week. Futures are down a little bit right now. But what's your takeaway in terms of just kind of the state of the market?
Yeah, Bank of America also coming out with a note, and I couldn't find it. It was weird, but I definitely saw headlines. But they said the inflation shock is still here, the rate shock is still coming, and the recession shock is going to come in the second half. So Bank of America just wants to get people to that two level on the bull bear indicator, get that cathartic down swoosh, see new lows in the market. They did call for new lows in the market. I have to say, that's not my base case, but I do think that this rally that we've seen is quite strong given the news flow. Having said that, as we'll talk about, the earnings themselves and corporate America is doing quite well. I think that the epicenter depends where you're based. If you're based in Europe, you think things are terrible right now. If you're based in the US and you're trying not to look at the news, things are actually pretty good. So it's a very interesting market. It's a very interesting economy right now, and how that contagion balances out and shakes out is really going to determine a lot of what happens over the next few months. I would say with inflation where it is and growth where it is right now, Atlanta Fed GDP now is going to be less than 1% right now. We should be looking for an acceleration in growth in Q2 and a deceleration in inflation, just as things revert to the norm, which is generally pretty good for markets. And that's the same thing that we saw in the fourth quarter. So I would look toward that as maybe an element of optimism with a potential downside risk with the Russia-Ukraine situation. But the base case is that things are going to improve in Q2.
Good deal. On the state of the war, we have Biden and Xi are talking today at 9 a.m. Biden is planning to, quote, deliver a message, which I think is what most of us do when we talk to people, but he's going to deliver a message and make it very clear that there will be consequences if Beijing supports beyond simply their words and moves into actual action. We've had this story kind of percolating for a bit. China is supposedly trying to make a decision in terms of whether they're going to provide military assistance and what that would look like, as well as financial assistance to Russia. For the most part, I think everybody would kind of understand what Biden's line in the sand is going to be. But I do think it'll be interesting to see how he kind of quantifies that. I mean, it's interesting that, he's going to draw a very firm line on this. And yet, a month and a half, 2 months ago, as he talked about Russia potentially invading Ukraine, he said, well, we'd have to see what kind of incursion it was. So I'm interested to see how firm that line is with China, and if we'll hear about it. I mean, my guess is we kind of joke about this all the time, but we'll probably get some generic press release saying the talks were productive, and that'll be about all it says. But Ben, what else we got going on with the Russia-Ukraine conflict?
Yeah, I think the main focus is going to be that conversation with President Xi today, but also you have the U.S. coming out with a note and a report today saying that Putin is likely to make nuclear threats if the war continues to drag on, saying that As this war and its consequences slowly weaken Russian conventional strength, Russia likely will increasingly rely on its nuclear deterrent to signal the West and project strength to its internal and external audiences, which I do, given the administration's ability to forecast what is going to happen throughout this war. You can argue with the response, but they've actually been able to call the shots. You can also argue what's the point of being able to call the shots if you don't do anything about it. But I would put some stock into the idea that the US does expect Putin to make more nuclear threats. Meanwhile, Russia is saying that Ukraine is trying to stall talks by putting out, quote, more and more new unrealistic demands. Moscow's conditions are well known. Again, I think this supports my view that Putin will only come to the negotiating table when Zelensky comes with the white flag. Now, it's not going to be an official surrender, but it's going to be something that at least between the two of them looks like a surrender. As far as the invasion goes, it looks like the ground forces are fairly stalled out. They're relying on more and less precise missiles. And they're also launching into the western city of Lviv. They actually hit an aircraft repair plant overnight. And this kind of gets to their idea of they want to destroy the infrastructure in Ukraine and really cut off Ukraine with the outside world and cut off Ukraine's hope. And that's their plan.
Awesome. Ben, you teased up earnings. We'll come back to that in a moment. We're starting to get some of that trickling in. Tom, what do we see in fixed income world as the week comes to a close?
Well, we really reached a fever pitch after the Fed meeting, and we've seen a little bit of buying across the curve. We're still exceptionally flat. No real big news or movement since we got the rate hike, which is pretty in line with what always happens, which is everything leading up to the rate hike causes the damage, and then once it actually happens, things sort of settle. So I expect a pretty quiet day. Bond traders are notoriously lazy, so I imagine there's going to be very low volume on the Friday of March Madness. So we're picking up some opportunities, but for the most part, we're seeing really good traction on floaters now that LIBOR is really ticked up. We're getting close to percent there, which is, it's gone up almost 9 times in the last 4 or 5 months. So it's really helping us on that side. We had the earnings come in yesterday for Signet Financial, which is our biggest high yield holding, which is looking increasingly more like an investment grade bond and not a junk bond as they continue to do well. So not a ton to report, but I think the big day was on Wednesday, and we're just sort of sliding past that now. And I think we're going to see a little bit less volatility going forward.
Good deal. Thanks, Tom. Ben, let's go back to earnings. Circling back on Lennar that reported a couple days ago. I've got some new commentary that we've kind of been able to sift through. Also got earnings from FedEx. How are those companies looking? What commentary? You mentioned kind of the strength of the U.S. economy, and if we put our head down and don't pay attention to news, things are pretty good. What gives you positivity even from some of these companies? What looks good?
Yeah, so firstly on Lennar, so Lennar reported Wednesday night, but didn't have its conference call until Thursday at around 11 a.m. And the information from the conference call was fairly positive, basically saying demand is really strong. They say basically, depending on what region, you're either strong or very strong. They say that buyers are actually seeking shelter from inflation. How can you seek shelter from inflation? Well, you lock in your costs. How do you lock in your costs? Well, you get a mortgage versus you have rental expenses that continue to go up every single year. So what people are doing are saying, hey, mortgage rates are going up, but I want to lock in my cost right now, and I'll be locked in for 30 years. And so that's what they're doing. And he says, and I quote, I also point one data point, which I think just supports the current state of what we're seeing, is that our web sessions online on Lennar, the big home builder, are up over 20% year over year. And the conversion of those leads is up almost 50%, just indicating the significant interest that's out there in home ownership. And it's a real structural shift that I think that we're seeing. And I think it's going underappreciated by the market. And I think this bodes well for the home builders, but also bodes well for the home improvement sector, who are going to be able to access more in terms of home equity. We have seen home improvement demand fall a little bit on the week-to-week credit card data, but I don't expect that to be sustained. I think that it's lapping tough comps, and I think that come the summer, I think you'll see a renewed interest in home improvement. Moving on to FedEx. FedEx actually missed on earnings, but they beat on revenue. The revenue per shipment was up by a whopping 19%. The reason they missed on earnings was because the margin. And this is, I think, a FedEx specific issue and what's going on in that industry versus necessarily something that's going on more broadly. Their margins are under pressure, especially on FedEx Ground. They had big labor outages due to the Omicron variant in December and January, which hurt them. But even so, I think their margins are pressured for reasons other than that. And I think that during 2020 and 2021, they were potentially over earning because they were doing more with less. Now they actually have to catch up, add capacity, that's adding expenses. And it's just a difficult model to operate when you have a new huge competitor like Amazon coming into the fray. Amazon really has the potential to disrupt FedEx's business, and that's something that FedEx will have to deal with. On the macro, though, you have revenue that's beating estimates, which I think bodes well for ultimate demand in the United States. So overall, the state of the economy is that we're still moving forward quite well. We'll have great read on the consumer with Nike earnings next week. We also have an NVIDIA Investor Day, which will be very interesting. So I'm very curious to see what happens in those reports next week. And then, of course, as we turn the page to April, we get into a period of potentially accelerating growth, as well as all these companies that end in March are on the normal calendar quarters. They'll be reporting earnings 2 weeks after that.
Good deal. Last story for the week. Porsche supposedly in discussion with Apple about a quote exciting common project. Ben, what's that going to be? Is Porsche going to make a phone, or is Apple going to make a Porsche?
I think you'll see some combination of the two. I expect that Porsche's backstory, the context is Porsche's getting ready for an IPO. They want to make themselves look like a tech company because tech companies get the best valuations. They're saying they're tied in with Apple. They're having some good conversations. There's been no decision yet. I think they're trying to drum up excitement for the stock ahead of that IPO.
Doesn't sound like Porsche to be self-promotional. Who knows? We'll wrap it up there. Hope you guys have a great weekend. We will be back Monday morning at 8:30, and we'll talk to you then.